So, you're in a trade, you get your order filled, and now the first thing you have to do is put in your protective stop. This is kind of like religion. It should become a hair trigger response. I know guys have very strong reactions to hair trigger responses, but that's the nature of the beast of trading. You have to put your orders in. As soon as you get filled and you've added risk, especially if you're using a leveraged investment, adding not a mental stop, but putting in a protective stop in is exactly what you should be doing. Now, here's where the tricky part comes in. I get a lot of emails. I told you this is going to be email, reader email week. The question always comes up from discretionary traders: when is the best time for me to move my protective stop to break even? I've always advocated as fast as possible. The thing is that there's got to be a little math and science behind all of that. As a discretionary trader, you're at an enormous disadvantage in that you don't have enough instances to really know what the best is, so you have to trade, you rely on your gut. And that goes with part of you deciding to be a chart reader. Now, if you're using ATR, there's two things going on. You can look at ATR, but your ATR should also be how you use for position sizing, right? So ATR is just like a data point. It won't mean much. So there's a big difference between someone who's buying 2 contracts, 5 contracts, 10 contracts, 100 contracts like me using ATR. What does that mean? So you have to conjugate all of that to know how it works with your R. Like, what is the percentage of your capital that you're willing to risk on any particular trade? That's a dollar amount, should also be based on percentages. So if you're using like 0.5% as that number, then you can look at the ATR, and so every ATR becomes 0.5%, right, up or down. So you can do the math in your head. That's how I would take a look at that. Now, as far as moving your protective stop, it seems as if there's a crowd of people out there who get aggravated by getting knocked out of trades, and I don't know for the life of me why that is. Maybe it's because you only have one setup and you're trading one instrument, so you have to wait for leap year to be able to put a damn trade on. I've always advocated that you really should trade 1 or 2 setups, but across dozens of instruments so that you're not forcing trades. And 2, you don't put yourself in a spot where you can become aggravated or go on tilt. Because the more, if your account's underfunded and you can only trade the minis and the micros, and then your setup finally shows up, you're just on your knees, praying to God because you feel lucky that you're in the damn trade in the first place. So now the last thing you want to see happen is getting knocked out and getting your protective stop hit. But again, that's something that you're going to have to reconcile with yourself emotionally, and that the truth is you go to Disneyland and you got Mickey standing there with his finger out saying you have to be this tall to be on the damn ride, and you can't reach the finger yet. That's just the way that it goes. You would kind of invite this kind of stuff. I was talking about it yesterday. I can't, if you want to go against the grain and bull your way into a situation that you're ill-equipped to be in, then everything that happens after that point is on you. No one owes you anything. You're not old enough, you're not tall enough, you're not this and that, to be in the game. I understand that. I too started with a smaller account. But the one thing I had going for me is the emotional constitution and also the maturity to understand that whatever happened in that account was my fault, especially with the frequency and the magnitude of losses. I knew I was an underdog, not from an education standpoint, but I know I was undercapitalized. So I had to come up with a set of rules that really worked for me. And the single most important rule that I think you're going to be using, both starting right now if you're not already doing it, and going into the next 20 years of your career, even if you're just going to run your own money, is that your job as a speculator, you can be balls to the wall, hell-bent for election as a speculator. Your number one job is to play superior defense. That's it. The winners don't necessarily take care of themselves, but you have to absolutely keep your losses small. One of the benefits, like I've shown, and I keep referring to this because I always try to put my best material out in the community for free, is if you go back to the live stream, you can see exactly what I was thinking at the beginning of my career and why I did what I did. If the live stream was recorded and it's on the live tab on the main YouTube channel, I tried to move my stop. Sorry, folks. I'm trying to move my protective stop to break even as fast as possible, because if you look at the equation for the expected value of a trade, there's four moving parts that you can try to optimize. The first part is the winning percent. That's kind of an accuracy game, kind of hard to do. The next one would be the magnitude of your average winner, right? You can do that and increase that by either trading larger, which I don't advise, or holding on to your winners longer overnight over the weekend, which I do advise. Then you have your losing frequency, and then you have the average loser size. So the losing frequency you can decrease, right? Because those are things that you want to minimize. And one of the easiest ways to minimize your losing frequency is to move your protective stop to break even. So if you have 40% winners and then 60% losers, forget magnitude for a minute, and you can cut and decrease the frequency with which you lose from 60% to say 40%, where you have now 20% break evens, that helps increase the expected value of a trade, which is really the second step that you should focus on after you learn to keep your losses small. I know it sounds antithetical because you're like, hey man, I want to be a pro trader, I want to be a scalper, I want to be a pro speculator. And that's all great. That's all fine and dandy. You have to take the chances. You have to be in it to win it. But at the end of the day, you've heard me say this before, your gains only look like gains to the extent that you keep your losses small or as close to non-existent as possible. Now, that doesn't really work. People are going to lose money, especially if you're a discretionary chart reader. If you want to use the math, right, and you're using ATR, for example, you can use ATR as the measurement to set a threshold at which point the security, if you're long and you've got a protective stop 1 ATR below your entry, you can wait for the instrument to appreciate 1 ATR before now you adjust your protective stop to break even. That does not mean that you're not going to get stopped out for break evens, which might be aggravating. But I don't, and nor can I really worry about how you feel about that. It seems like some of you, when you write, I can tell that you're aggravated. And one guy wrote recently about, being in that spot. And it's like, look, don't trade then. You know what I'm saying? Like, I don't know what to tell you. You can't, if you're a discretionary chart reader and you didn't want to invest the time or the money, especially, into getting a simulator so that you would know for sure what the numbers were over a 10 or 20 year period of time, that's your call. But now you have to live with that uncertainty of not knowing, right? That's part of it. Again, I can't have sympathy for people who want to feel victimized by putting themselves in these situations. Like, you know what the rules are, and it's up for you to make those decisions. If you want to kind of cut corners or be cheap, right? Because that's what it comes down to. Because there's enough affordable solutions out there that are like less than $1,000 where you can do the work. And it's not for me to teach you. Like, that's something that goes way, way deep into the premium coaching stuff. Like, I'm not doing that here. You have to be able to do just like I did. Figured it out for yourself. How bad do you want it? And if you're not willing to do it, well, there's your answer. You know what I'm saying? Like, you have to have a deep look within yourself and figure this stuff out. I wanted it more than the next guy. And when they were going out, doing whatever it was, boozing, doing drugs, chasing women, I was going home and doing the work. Or I was staying at work, being on the phone, trying to get clients. And, if you cut corners, you get the results of what that looks like, you see? So use ATR and just realize that even if you adjust your protective stop to break even, that doesn't mean that you're home free. It just means that you're going to get knocked out. But you can also look at the probability of what happens when you get in a trade and when it immediately works against you and you get knocked out, and what happens when a trade starts to work in your favor, you adjust your protective stop higher. Because either way, it's 1 ATR. And so in the short run, it's really, really random. And if you get knocked out of 5 trades, that's when people start writing and be like, man, I've been using 1 ATR stop. Do you think I should extend it and use 2 ATR? And I'm like, well, if that's how you position size, then maybe. But, you're going to have to find a way to process your feelings around frustration and aggravation when you get knocked out of trades, especially the ones that you get knocked out of and they go on to make money. That's just part of the deal. It's the way it goes. And if it makes you aggravated, I would take some time away from the market and just try to process your feelings around that. Because if you don't, what's going to happen is the feelings are going to keep coming up. You're going to get so aggravated. And that's when you start to open yourself up to doing really stupid things like revenge trading, going on tilt, or entering orders and not putting your protective stops in. That's all I have to say about that. Check out this video here.